Good morning, my name is Cesar Iliano. I am the Content Director for BNamericas. Today, we will be presenting the main findings of our 2022 Mining Survey Report, which was produced thanks to the participation of hundreds of industry executives and in collaboration with Deloitte, the Brazilian Mining Association IBRAM, and the Instituto de Ingenieros de Minas de Perú. Laura Superno, our managing editor for research, will be going through the key conclusions of the report, and then she will be moderating a conversation with the three members of the entities that helped us produce this survey. She will be joined by Juan Carlos Ortiz, Vice President of the Instituto de Ingenieros de Minas de Perú, Navesh Raghunantham, Partner Operations Transformation ER&I at Deloitte, and Julio Cesar Neri Ferreira, Director of Sustainability and Regulatory Affairs at IBRAM. I would like to remind all attendees that you are in listen-only mode. You can ask questions using the space at the box in the right hand of your screens. I also want to remind all BNamericas clients that you can read and download our mining survey report from the report section in our platform. So I now leave you with Laura.
Good morning, everyone. Thank you very much, Cesar, for the introduction. Okay, so first we'll be going through the main findings from our 2022 mining survey. And the first point of analysis that I wanted to share this morning is, it appears from the survey that we may be starting to see the beginnings of a shift back towards a focus on growth among mining companies. We've been asking survey respondents for about 5 years what they believe will be the primary strategic focus of mining operators. And both before and during the pandemic in 2020 and 2021, and now, the largest percentage of responses has been that operational optimization is the top priority for mining companies. Since the pandemic, we also included a related alternative to this question, which is that ramping up suspended operations would be a top priority, and this choice has also received a fair number of responses, but less than in 2020 and 2021. If we take this result at face value, maybe it's not surprising considering the cost pressures that the industry is facing and what is probably an even more challenging environment than a few years ago for new investment decisions. There's greater uncertainty about both global and local risk factors. Looking at the chart though, which shows the total responses to the survey, operational optimization and ramping up of operations suspended due to the pandemic received fewer responses this year, while organic growth received slightly more responses. The next slide, please. But where we found an interesting insight that speaks to a possibly changing attitude despite these persistent risk factors is that when we separate the survey responses that come from people who work at mining companies, at mining operators, versus people who represent other types of entities, there is a difference in the strategic focus. The chart here shows only responses from people at mining companies comparing their answers this year to last year. And among this group of respondents, organic growth appears to be the #1 choice in the 2022 survey by quite a noticeable percentage. And this is a pretty big change from last year's survey. It's also interesting to note that among the total group of respondents that we saw on the prior chart, 18% did say this year they thought that ramping up operations that had been suspended due to the pandemic would continue to be a top priority for miners, but only 6% of mining company respondents said that. So we think that suggests that mining companies themselves have mostly recovered from the pandemic and are ready to move on to a new phase. Next one. Respondents from mining companies also gave a stronger positive opinion regarding the overall outlook for market conditions over the next 12 months. We see here that 57% said they believe conditions will be conducive to increased capital spending versus 46% of the respondents from other types of companies. We also asked respondents about their expectations for new projects. And this is where we were a little surprised at the results, given the positive outlook for market conditions and that renewed focus on organic growth among the mining company respondents. The overall response here regarding whether or not the design and approval of new projects is likely to accelerate was somewhat tepid, with just 34% overall saying they think activity will accelerate. On this question, there was not much of a difference between the responses from mining companies versus other entities. And in both groups, we saw 21% saying they think project activity will actually slow down. So the pie here is fairly split between the different alternatives, and we think these split opinions reflect a perception that project investment decisions could be held back by the continued or maybe even increased uncertainty in local investment conditions, combined with the global phenomena that we're seeing this year, such as the Russia-Ukraine conflict, deceleration in China, inflation, possible recession. The idea that these risks could hold back investment decisions despite the broader confidence in investment conditions, we think is what's giving us these divided opinions about new projects. The next chart shows exploration. The outlook was somewhat more positive regarding exploration spending. We saw 42% of respondents overall saying their companies are planning to increase spending. The chart only shows companies that responded with increase or significant increase or decrease, and excludes those who said this question didn't apply to them. So among respondents who would be theoretically spending on exploration, we have 42% saying spending will increase and only 7% saying exploration will decrease. So while there may be some hesitation, as we saw in the prior chart, in terms of launching new investment decisions at more advanced projects, it looks like there could be some acceleration in terms of exploration. We also asked our survey respondents whether their company plans to increase spending this year. And overall, we saw that almost half said yes, which is a lot higher than the 34% who said spending was going to increase at this time last year. And another 29% this year said spending levels will remain steady, and only a small percentage, 6%, are planning spending to decrease at this point in time. Looking just at mining companies, this is the same question about investment, but looking only at the mining company respondents, the upward movement was even stronger. 56% of mining respondents in 2022 indicating a larger investment this year, up from 30% a year ago saying they plan to increase spending. So we also asked respondents about their allocation of resources to decarbonization, ESG, workplace diversity, innovation, and digital transformation in the near term. And in all cases, only a very small percentage, or 0%, indicated plans to decrease spending. There were some variations, however, on which items will receive bigger spending increases. Starting here with ESG, we saw 62% of respondents overall saying that their entity plans to increase ESG as a corporate strategy focus, including 20% who said prioritization of these issues will significantly increase. And among the respondents from mining operators, it was an even higher percentage, 71% in total, saying that ESG will receive greater priority. Looking specifically at decarbonization, 47% of respondents overall expressed plans to increase spending over the next 12 months, which does represent a broadening of decarbonization spending compared to the 37% who said last year that spending would increase. Among mining company respondents, again, the increase was more marked, with 48% saying spending will grow versus 32% who said the same a year ago. Okay, this year's survey also delivered a slightly stronger result in terms of intentions to increase spending for digital transformation. 66% of all respondents saying their company plans to spend more on digital in the year ahead, compared to 62% who said that last year. And that in turn was a very big increase from the the year prior, 2020. So what we saw is from 2020 to 2021 a very big increase, and this year a slight increase and a lot of just maintaining that digital spending. The response among mining company respondents, however, we saw was a little bit less enthusiastic in terms of digital transformation. 56% planning to increase and 33% planning no change, which also may be due to that very large increase in the prior year. In terms of workplace diversity, the majority of respondents said their company plans to increase spending, targeting greater diversity and inclusion in their workforce. And we saw this both among the total pool of respondents and when we isolated responses from mining companies. This is expressed in the blue bars on the chart, 56% saying that spending for general diversity and inclusion initiatives will increase, with another 29% saying spending would remain unchanged. When we asked, however, about specific spending plans for including more Indigenous people into the workforce, just 18% overall said their company is planning an increase, and that is shown in the orange bars on the chart. And the majority said spending levels will not change. More than a quarter was unsure. We think the results are somewhat surprising, considering that here in Latin America, mining activity very often shares territory with Indigenous communities, and conflicts are a persistent risk for projects. Moving on to risks, we asked survey respondents what they feel is the biggest threat facing the mining sector in Latin America over the next year. The responses show that the biggest concerns by far remain political or legal uncertainty and increased country risk or resource nationalism. We did see, however, that these issues received slightly smaller percentages of responses this year compared to a year ago, making way for a somewhat stronger but still minority response that the issues of higher costs and community relations could be the biggest threats facing the sector. When we isolated the responses from mining operators on this question, we saw that the increased concern about costs was completely attributable to non-mining company respondents, while the increase in concern about community relations risks was mostly attributable to mining company respondents. It's perhaps also worth mentioning that this issue of possible lack of financing, which on the chart looks small with only 2% of total respondents saying that this is the top risk. This concern is also much stronger among mining company respondents, where 8% overall said that lack of financing is the top risk. It's still a minority, but it's a risk factor that barely registered on the survey in past years and looks like it may be becoming more of a concern. In terms of the investment climate for mining around the region, this year we saw a significant deterioration in opinions of Chile. Chile received just 32% of the votes as the best mining destination in Latin America, compared with 50% a year ago. The change reflects heightened uncertainty around the Constitutional Convention, as well as tax reform that aims to increase mining-specific taxes. We saw Chile's decline was countered by a strong uptick in respondents who consider Brazil to have the best investment climate, putting Brazil in second place. And although Brazil is also in the midst of debates around mining royalties and taxation that has produced some concern in the sector, and elections are coming up later this year, the underlying rules of the game in that country are not in question. In third place overall came Ecuador, which, despite a somewhat delicate political environment and underlying community conflicts, has managed to solidify its reputation as a jurisdiction with favorable rules and strong state support for mining investment, as well as high potential for discoveries. Peru came out steady this year compared to last year, with 8% of respondents saying it's the best place for mining investment, which is a big difference from a few years ago when Peru consistently came in second place in our survey behind Chile. We think the arrival of the left-leaning President Castillo has coincided with an increase in social conflicts and mine stoppages, which players in the country say the government has not managed or has even exacerbated, and that for many operators has created a more hostile environment. Lastly, this chart looks only at the responses from, can you move to the next chart? There we go. This is the one? Okay. All right, okay. This looks at mining companies versus other entities. And when we separated the responses from mining companies, there was even less favor for Chile, with just 22% selecting Chile as the best country for mining investment. This put Brazil in first place among the mining company respondents, and Ecuador also received a strong increase in responses from mining companies, tying for second place with Chile as the best investment climate in the region. As for Peru, the country received the same 8% of responses from mining companies versus non-mining company respondents. And just to touch on Mexico, we also saw Mexico receive fewer responses this year. It received 4% of responses overall, but no responses at all from mining company respondents, saying the country is the best place for mining investment, which suggests that the conditions under President López Obrador have become perhaps too difficult. Apart from the government's freeze on new concessions, regulators have threatened to not grant any new permits for open pits, and there has been a lot of noise around the nationalization of lithium resources. And even though the country does not currently produce any lithium, this kind of resource nationalism is always going to be very worrying to investors. So with that, I will conclude the presentation of the 2022 survey results. I thank you for your attention, and I would like to now invite our panelists to turn on the cameras and audio for our panel discussion. Now, where's my panel discussion? Okay. There we go. I figured out my camera as well. Hello, everyone. I'd like to welcome Navesh Raghunathan from Deloitte, Julio Neri from IBRAM, and Juan Carlos Ortiz from the Instituto de Ingenieros de Minas de Perú. Welcome to everyone, and thank you for joining us. I would like to start our discussion today with a kind of general question. I'd love to hear everyone's opinion on the survey results. From a general mining industry standpoint, what do you make of this situation that emerges from the survey results, where we see mining companies showing greater confidence in market conditions, so they say, greater focus possibly on organic growth, and also greater intention to spend, but only a third of people think that new project development will accelerate, which is the same or less than the past few years. It seems kind of paradoxical, so I'd love to hear some analysis from the experts. Navesh, would you like to start us off this morning?
Sure thing. So interesting state of results that you prepare, and firstly, well done on consolidating those results for the feedback received. It's not surprising based on some of the political landscape scenarios. It's always a competition in Latin America in which country is always doing better. And I think there's an increased need that all Latin American countries need to actually work stronger together and deal with matters cross-border in a more collaborative way. I think investment will always flow, irrespective of which border it is dealing with, as long as the commodity is there and it can be mined safely with minimal risk to both shareholder and communities. I think there's always opportunity for extraction and commodity growth.
Okay, thank you. So yeah, definitely opportunities are there. The question is who's willing to take them, I guess, at this moment. Julio, Cesar, maybe you can tell us what you're seeing in Brazil.
Well, thank you, Laura. I think the picture in Brazil now has another point that we have to stress, which is the elections that we will have in the end of this year, right? Mm-hmm. Although no matter what the government is, we have to deal with the government, right? But there is two different point of views on how to deal with business. In fact, competing for the power. I see in Brazil today, what we see in Brazil today is, let's say, conditions for tax raising. We have a decision yesterday in our Supreme Court that created, that officialized a new taxation over the mining industry, right? And of course, this is a threat for the industry. But I think also that the good conditions that Brazil have and the potential that Brazil has for our bodies also helps in terms of attracting the investments to Brazil, right? We have, let's say here, we have a strong confidence on the law and on respect on the contracts, right? I think taxation is a problem, but in the other points, I think the mining code is good enough. Thank you.
Okay, thank you. Thank you very much. Juan Carlos, what do you think of the situation? Is there greater market confidence in Peru? It's what we saw in the general results of the survey. Whether or not it's true in Peru, maybe you can give us some insights and what that means for project development in the near term.
Thank you, Laura. Well, I think there's two things running in parallel. I think there is a big demand for copper. There are a lot of resources of copper in Peru, so I think that most of the investment will be focused on that commodity, a particular commodity. Probably gold, probably other commodity won't have that benefit. And for the particular case of copper, I see that most companies will spend more of the money doing brownfield expansions, where they have a limited exposure to risk. They have a more controlled environment for permits, for the community surrounding the existing footprint of the operation, and also for the capex that it might be linked to this expansion. So copper expansion on the existing footprint, I think, is where most of the activity will be in the next years. I will see little investment in large mega projects, new ones. It's a shame that's going to happen that way, but the current instability of the government, the swinging laws that are coming in, I think is not a good environment for investment. But at the same time, something interesting that came from the review that was shown to us is that also it's an important increment in exploration. So it's interesting to see that at the same time, the companies are thinking in the say the short term, the next 3-4 years, at the same time that I'm looking for the long term, for exploration, for be linked to or be prepared to have a good portfolio of projects whenever the situation or the conditions change in the country.
Thank you, Juan Carlos. I'll go straight into a follow-up question. As I mentioned in the survey, in previous years, Peru was always one of the top choices. We've asked people for the last 10 years, which country they think is the best for mining investment in Latin America. And almost every year, Peru was number 2. I think once or twice it came in number 1 in terms of the most people choosing Peru as the best place for investment. So this, the change has been very, very abrupt or intense. What do you think are the key factors to consider there, and what is maybe the way out of that tunnel back to this previous, maybe more positive perception? Because clearly Peru does have many advantages as a mining destination.
Well, that's a tough question to know how to solve this kind of problem, to turn this trend. But of course, number one is the political instability. You know, when some government came and openly said they would like to review the constitution and the market model, it's scaring all the big investment. It's clear that whenever that changes and a clear path is defined for the long term, it will be a fertile ground for long-term investment like mining, 20, 30 years on the view. That's number one. From the second point of view, permits are taking longer than expected and getting more confused. Everybody is willing to do the best, doing the highest quality operation they can deliver. But sometimes the government is not moving at the same pace. So the review, the papers are extremely slow. And there are some additional steps like in Spanish is consulta previa, that's a kind of prior consultation to the communities that is not fully understood, I think, as it is being used in other countries in Latin America that signed that agreement. So now, for instance, for doing exploration, you need to pass this process that will take 1 year or two. Always is positive, but it takes 2 years in addition to the normal permits that you need to fulfill. So permits is something that probably could be staying up, keeping the high standard that we would like to have in the industry, but doesn't need to be taking 3 to 5 years to be granted a permit. So I think these two key components are crucial to turn it back to pay more attention for investment in mining in Peru.
Perfect, thank you. And you know, going back to Julio Cesar also, I'd like to ask you, you know, a little more deeply into the situation, the risk situation and the opportunities for in Brazil for mining investment. You mentioned the approval of a tax proposal. There has been a lot of concern around this. Is this impacting activity and project decisions? Is it impacting profitability at potential projects to the point where you're seeing hesitation from mining companies?
No, I cannot say that we see any kind of decision on postponing investments due to this, right? It was, in fact, it was in our Supreme Court for more than 80 years, right?
Mm-hmm.
To take this decision. So it is something that was somehow expected, right? So, of course, we from mining tried to change the situation, trying to not going on with these taxes because it is over the inspection, mainly environmental inspection of the mines, right? And we think that we have another taxes that are already paid for that. But it's a decision, so we have to accomplish with the decision. We have to follow the decision, right? We see today we have a picture for the investments in Brazil for the next 5 years in about $40 billion. And let's say 46% of these are ongoing investments. And none of them were postponed, right? All of them are running well. So we do not expect, if it was only the tax that is included, to affect the market. But of course, it is one point that it will reduce the profitability of the mines, right?
Sure. I guess the issue of profitability and especially with generalized cost increases that we're seeing in the near term are an issue that companies are going to have to deal with everywhere. Higher taxes don't help, but I wanted to talk a little bit about optimization, operational optimization. It's quite interesting to me after several years of our survey that there appears to be somewhat less emphasis on operational optimization as being the top priority for mining companies, which is the way we ask it in the survey. What do you think will be the top, strategic priority for companies? There appears to be somewhat less focus on optimization right at this time when there is a large upward cost pressure that looks like it could be quite persistent. So I'd like to ask Navesh, first of all, do you agree that there is actually a growing focus on growth, organic growth? And if so, to what would you attribute that at this point in time?
Thanks for that, Laura. There is no doubt a shift in growth and ramp up in production post the severe lockdowns of COVID. And in fact, I applaud all mining operations which have successfully found ways and means to do this. There's been really creative ways and adaptation to the working environments. So for example, the introduction of safety and health wearable tech, sanitation protocols, all the arrangements to work remotely so as to reduce risk exposure. And all of that has come together well to rebound back to pre-COVID performance and even growth on pre-COVID performance. All these arrangements have succeeded in ensuring operation stability and that growth. And this is what I found amazing as to how people can join mines and address changing environments. There is, however, for me, a concern that the growth trajectory will be impeded by skill shortages. For example, I'm starting to see a significant number of projects across the continent in Australia, for example, that have not been able to commence due to skill shortages. And this could become a real problem for us in the broader Latin America.
And how do you think that optimization initiatives, digital transformation and innovation will advance in general, and how might those intertwine with the skills shortage or approach?
So, super question and link. Although the result shows a drop in process optimization, I think there's so much other noise that may be skewing that result. Process optimization remains key to every operation, whether it's new or old. And there's always a need to improve and drive efficiencies to increase the volume so as to dilute costs or to reduce costs directly. And we just saw it now in these last 6 months in our current macroeconomic landscape with high energy prices and somewhat mixed commodity demand and the impact that has had on our cost per ton production. The inflation increases have been unprecedented, causing various country treasuries to drive interest rates in an attempt to offset this. And this being said, there is an emphasis and need that we manage costs and maintain and improve production. And with the onset of average grades dropping annually, there is more so now than ever the need for process optimization. A little bit also on a cost per ton basis, we've seen that in the last few mid-year financial results being released from some of the majors, that just the impact of escalation inflations this last 6 months has caused almost 19 to 28% spike in production costs. So it has been significant, and we need to optimize processes to bring this down, or these mines start facing a reduced demand for product because they're too expensive.
And over the last a couple of years, prices have increased, and mining companies have enjoyed quite a strong, cash flow. So how much does that impact, do you think, their when they're looking at capital allocation? How much does that impact their decisions in terms of we're going to try and grow production, grow operations, or we're going to look more to keep focusing on optimization?
Yes. So, you always have to compare what is the growth and for commodity price versus cost. And in this case, the commodity price has completely outgrown costs, therefore giving these mining companies the super profits that they've seen in the short term. But we've very quickly seen, for example, oil dropping below $100 today. We've seen that some of the boom commodity prices are no longer up where it was. Iron ore falling, copper no longer breaking the $10,000 per ton, and so on, which means that the cost element hasn't completely eroded. And that gap in growth will start to reduce, forcing mining companies to start being more strategic and clever about what they're doing from a process optimization perspective. So we're starting now to see more spend in operations technology, for example. And instances of that would be spend in technology to monitor your yellow fleet, your improved truck and haul operations, electricity consumption across the mining operations and plant operations, water use, and broader raw materials consumption. Those all become inputs into that cost factor, and how technology can be used to actually drive those variables in a more healthy and sustainable way. There's also a drive to use also machine learning in plant processes, a very closed system. I mean, we always said mining is difficult to try and optimize because it's too many loose and open variables, but the plant itself is a very closed circuit, and it's easy to adapt machine learning into those processes. So you're starting to see a big uptake in digital twin models being done from the AI platforms and data sets available. And we're looking at also optimizers to test savings in a safe and parallel system that can then be implemented to effect the cost saving. I want to also touch on the water consumption, because we've seen that the West Coast regions of South America are becoming increasingly important to monitor and control water consumption. It's more arid, rainfalls are becoming less in this current terms that we're operating in, and we have to reduce consumption. And very interesting, Laura, that we're starting to see that mining companies were able to achieve in the last year alone a higher production on the back of less water consumption per ton mined and processed, which is a good factor that we are swinging and adapting to that change requirement.
Thank you very much, Navesh. And I think the issue of water consumption leads right into the next topic I wanted to touch on, which is going back a little bit to ESG and water consumption in Chile and Peru. We know all too well is not only about being environmentally responsible, it's very much a social issue as well. So if we go looking back at ESG and stakeholder relationships, I mentioned earlier in the webinar that we asked in the survey about workplace diversity and companies' intention to include more diversity in their workforce, and also more Indigenous people specifically. And while we saw that more than half said they would increase their spending on diversity, only 18% said spending would increase specifically to capture Indigenous talent. And it's sort of surprising in a region with such a large Indigenous population and countless examples of mining projects finding problems around community relations, often including Indigenous groups. So I would love to hear from each member of the panel, if you think there could be an opportunity here to reevaluate the strategy around diversity and inclusion in a way that doesn't just try to, fill an ESG requirement, but rather, structurally support an operation or even the mining industry's legitimacy and sustainability. I don't know who would like to start on that.
Maybe I can start, Laura. There is a big concern always in Peru, and a big learning curve, I would say, how to deal with this challenge, how to incorporate these indigenous people into the operations. I would say that the operations that are more than 10 years old already have a big footprint on the local communities, not necessarily indigenous, but the people that live near the mine, what we call ring number 1 or ring number 2, depending on how big the mine is. So I would say in most cases, I would say around 40%, no more than that, in some cases, it's already people from the surrounding communities. It's a learning process that took around 10 years. So most of the mines that are older than that already have 40% of the payroll or the headcount in general from the local community. That's a good thing. Now, I would say that the new trend that is emerging stronger year after year is that it's not only that the people around the communities, or the communities around the operation are looking for a place to work straight, like a member of the payroll, but also to have their own businesses as community. So it's getting more and more common now that they have collective companies that represent the community itself, that is delivering services to the mining industry. They start smaller, giving very simple services like catering or transportation, but it's moving up. Now they are, in most of the cases in Peru, it's not difficult to find large contractors for air movement that are the community itself. So they have a lot of pride on that. And I think it's getting stronger. And the example in several operations now is being replicated in other operations. I would say that it fits two things, because people like to work for the company, but other with more entrepreneurial spirits. They want to have their own experience, giving the chief of the company, giving the services trade. And what they would say, and this is very important, is that at the end, the mining company will end up their lifetime, 30 years, 25 years. So if they are only workers, it will find very difficult to move somewhere else because they would like to be living around their original places. But if they have a company and the company learns to deliver air movement services or construction like hospital, roads, or any other metal work services, they can be getting that services beyond the life of mine of the operation. So it's very interesting that they are not looking straight for a job into the operation, but they are looking for a company that can be a living entity beyond the life of the operation.
Yeah, very interesting insight, interesting way of looking at it. I'll take the opportunity, Juan Carlos, also to, we have a chat going where participants in the webinar are able to ask us questions. And we did receive a question that sort of relates to this topic. So I'll just ask you now. The question is, Juan Carlos, could you share your thoughts about the civil unrest at the mines in Peru? Companies, as you said, communities want, in a lot of cases, to have economic opportunities around the mine, but we're also seeing a lot of unrest in a lot of situations, including stoppages. Could you share your thoughts on that and how maybe that relates to the issues you were just talking about?
Yeah, sure. Well, there is not a general arrest. I would say it goes case by case, depending on the project or depending on the mine operation. The participants that are kind of taking the name of the community to maybe promote a more political action around the operations. So it's a case by case scenario, and it's important to mention that some companies can prevent that. They have a direct negotiation, direct communication, fluent communication with the communities. I trying to keep everything in balance. Of course, there is a big expectation. There is a large US companies surrounded with farmer kind of poor communities around, and everybody's looking at the company now the only way opportunity to have a better deployment for infrastructure. The government takes a lot of time always to deliver infrastructure like hospital, roads, and other services. So the expectations are high. They want to have it now. In some cases, we have in Peru a program that's called Obra por Impuestos. That's that you can build infrastructure using your taxes. So you get into agreement with the local government, and again, the future payment on taxes, you build the infrastructure now. So it has been a really pressure release for mining companies, and it's something that's very, very interesting. It's growing very fast in Peru, and it's helping a lot to calm down these expectations with infrastructure be delivered out of the taxes that the company is going to pay anyway, but in the short term goes very close to the footprint of the operation, nearby hospital, roads, different kind of services, and it's giving a new balance for the operation. So I think it's something that is working out in most of the mines. Some other has some more complicated problems. Probably they need to have a particular solution, and it will take sometimes more time than expected. But I would say that it's not a general trend. It's just in particular cases, and some companies are managing that very well. Some others are taking more time than expected, and probably that's generating this press media coverage that is happening all over, but it's in particular places and some particular companies that now are trying to turn it back into a normal situation.
Okay, thank you. Thank you very much, Juan Carlos. Let's move to Julio Cesar. Could you tell us the question we were talking about, diversity and including indigenous people in operations? Is this something that is a trend in Brazil, or what is the approach that mining companies?
It's a trend, and it's a very seriously be treated by the companies, right? We have in IBRA one work in ESG agenda that we have 12 groups of the employees of companies, associated companies, that are working in 12 different issues. Among them are diversity and inclusion. And we are looking for the targets for this inclusion and the increase of diversity, right? And also on the metrics today to measure this, right? The statistics is something that we have to improve a lot in our sector in Brazil. One point that I want to tell is that the indigenous point we cannot apply in Brazil because the mining in the indigenous lands are not regulated in Brazil, right? We have in the constitution let's say the permission to have mining in the indigenous lands, but it has to be regulated by the Congress, which was not already made. So all the operations that you see in the news today about mining in the indigenous lands are illegal. And so it's a different point. But as Juan Carlos said, we also have a big work in the companies to take the local people to work in the mines. Right? And of course, we have to increase the skills of the people. We have to train the people because it's not easy to find drivers, people to work in mechanics, electricians in the communities, because if you go to the remote lands, remote places of the country, right, it's not find the skilled people to work in the company. So we have to invest a lot in training. Right? And it is being made, and the companies are taking it very seriously, and we can say that the diversity and the inclusion of, for example, the women in mining, right, is one initiative that the IBRA is sponsoring. We have a movement that started in UK and went to Canada, and we also have a branch in Brazil, and IBRA is sponsoring this movement in Brazil. And this is for the inclusion of women in mine. We know that we have a higher amount of men working in mine, but it has to be more balanced, right? And that's a point that we need to work a lot on this, and the companies are doing so.
Okay, perfect. Yeah, so quite a different scenario perhaps in Brazil that versus Peru that requires a different approach maybe in some cases. Mm-hmm. Mm-hmm. Thank you very much, Julio Cesar. Navesh, I'd also love to hear your thoughts on this issue. I know, through Deloitte's work, looking beyond just Latin America, there's maybe a higher percentage of companies investing in, I don't know about diversity and inclusion, but specifically in including indigenous people into their workforces in other regions, maybe in Australia and Canada versus in Latin America. But considering also, Juan Carlos' comments, maybe the goal of the communities is not necessarily to work at the mining company, and there also already is a high level of inclusion, perhaps. What's your take there? How can we, how well positioned is the region here, and what's the mandate for mining companies in this sense?
Yeah, ESG, and thanks, Laura. ESG has been one that is becoming top discussion on every exec's point of book, as well as probably items that keep them awake at night. And I think what needs to happen is break the stigma of the wrong that's been done before. It was too easy to extract and move on. leaving communities, the environment more in tear than rather in growth. And I think to what Juan Carlos touched and Julio about what needs to be done differently is try and balance that. I think it's making it now more ever than more increasingly impossible to invest and build a confidence in your capital projects and growth portfolio because of the ESG unknowns. And no matter what companies are doing their hardest to try and balance the challenges they face with communities and indigenous people, it is often not seen as enough. So I think there needs to be very much a collaborative approach or a more collaborative approach with communities and see how those long-term investments in developing skills locally that could onboard. I like what Juan Carlos touched on about a 10-year program that has borne results for some of the newer projects coming online. And I think that is the longer-term requirement that we need to start to see and fast-track that to make it happen, to onboard local skill sets and talent to bring them on board.
Mm-hmm.
Wonderful. Thank you. Thank you very much for the insights. We have a few to several minutes left, so I'd like to put out one more question to round out the panel discussion, something a little broader. We've seen, the global economy this year bringing, more uncertainty than recovery, which maybe a year ago we would have thought we'd be seeing more recovery this year rather than uncertainty. And there is concern that, important economies, the United States, for example, could fall into a recession, which undoubtedly would have a strong negative impact all around the world. What would be the impact on the mining sector, in your view, in the event of a global recession in the next year or two, and specifically here in Latin America? What can we brace for in case that might happen?
Well, if I can start, Laura, we have to say that when we look at the results on the first half of the year, we have a decrease in the gross product of mining in Brazil for about 10%, right? And it was not only because of price of commodities, right? Because it's also lower demand, right? We have to say that in Brazil, you have the great majority of iron ore in our exports, right? Mineral exports. And the decrease in the market in China and also the decrease in the prices also affected a lot. And this is one thing that we have to take a lot of caution, because we have to see what will happen in terms of COVID fight in China mainly, right? Of course, we are, let's say, moderate optimistic with the situation. We observed some increase in the prices in the end of July, right? We hope that we can have some recovery in the second half of the year. But of course, this is one issue that we have to pay a lot of attention, right? What will be the market in the world? We have this inflation that Navesh and Juan Carlos told about. Inflation means higher interest rates, right? It can affect the projects, not the ongoing, but the future projects, the green field. That's one reason that maybe was reflected in the poll, right? Showing that people are preferring the investments in areas that are already in production, right? Not open in new areas. But this is one issue that we have to take a lot of attention for the rest of the year. We do not expect the same results as 21 in terms of demand, but we hope that we have a slightly higher demand than in the first half of the year.
Okay, thank you. Thank you very much, Julio César.
Laura, I have a slightly different opinion, and I like to always see things as more up than down. I think it's generally my personality. sorry about that, Julio. But if I take a recession, it's not necessarily a bad thing. And if we can spin it off, remember during times of recessions, also times of consolidation. And we've seen a very interesting demand for green energy and commodities that support green energy. And we're so far back from a green energy space to grow that electric vehicle green economy that there will always be a copper deficit, for example, or lithium or cobalt. And you will start to find that even though we may go through a recession, there'll still be a demand for that product. And in that sense, there could be another spin-off on that as a consolidation, where in the next 3 to 5 years, you start to find those greener economies starting to invest in mining companies. So who knows if Tesla will buy into any of the major copper mines in South America as a shareholder. We've seen these electric vehicle manufacturers buying into the lithium and cobalt operations in Central Africa. What if that shifts to a copper environment because the copper price drops just enough to allow for some new consolidation? And it could create a new shift in terms of how the structures look. Thanks.
Interesting.
Just to add to, sorry, Laura. Thank you. No, just to add to what Navesh and Julio said, I think that's not the first time that the mining industry has to pass through one of these swinging ups and downs of the economy. So this is a kind of recipe for the ones that have been in this industry for more than 20, 25 years. In this short time, you preserve cash. So probably you won't be spending in delivering a new project, a big one, but you probably will be investing enough for exploration and for the risking the existing portfolio that you have for new projects to be ready when the time is right. So the time right could be 3 years down the road, 2 years, nobody knows. It's not right now probably, but you have to be ready in 2, 3 years down the road to have your portfolio ready, de-risk it, you know, and whenever it's the time, all the parameters are aligned, you are ready. And so at that time, you can look for a partner, you can get the money, you can generate your own cash and deliver, start construction and deliver a project. In the short term, whenever this recession might last, probably you preserve cash, you have short-term recipes for that as well. You can reduce a little bit of the stripping in the open pit. You can do mining in some high-grade areas for a period of time, 2 years, 1 year. So you have also a recipe for the short term to preserve the cash, but to invest the cash that you generate for the long term, whatever the conditions are right.
Very interesting insights from everyone. I don't know if anyone would like to make any further comment before we close out our discussion. Okay, I guess not. I think I think we got some very interesting insights from everyone, and I just want to thank everyone very much for taking the time to participate today in the panel discussion, and also thank you to those who are listening. I'll turn it over now to Cesar to close out the webinar.
Thank you very much, all of you, Juan Carlos, Julio, Navesh, and Laura. It was a very interesting conversation. I just wanted to remind again all BNamericas clients that you can read and download our mining survey report in our platform. For those of you who are yet not clients, I invite you to visit BNamericas.com and check out the great content that we publish every day. Thank you very much again. Have a nice day.
Thank you. Bye-bye.
Thank you.
Thank you, everyone. Goodbye.